Okay, how are you going, guys? All right, so the title of this video should definitely have caught your attention. Who wouldn't want to make 60% profit in just 3 trades? All right, well, it's not just 3 trades, but it has to be 3 consecutive winning trades, obviously winning trades. So I just want to go through it. This video is not going to go through how to place trade, how to do the technical analysis or anything like that. This one is just going to go through a particular type of trading, or probably it's more like a particular type of risk management called asymmetrical compounding. Big word. All right, so in my opinion, trading has a lot more to do with risk management than it does with working out which way the market's going to go. So just let me share my screen just quickly. Okay, just set this up. Just quickly, guys. So let's say we have, we'll make it nice round figures so that we can all follow along. $100,000 account. And what's the general? I mean, you can vary this figure, but so what I'm going to do here, or I think this is the title of the video, I'm only ever going to risk 1% of that $100,000. So I'm never going to have more than $1,000 at risk. Okay, so our very first trade, we are going to place a trade, we're going to place a stop loss, and we're going to place a take profit, just like most sort of trading. I'm going to make the size of the trade dependent on where I place the stop loss. But the most important thing is I want that stop loss, if I hit it, to give me a $1,000 loss. In other words, if this trade loses, I'll hit that stop loss and I'll lose $1,000, which would be 1% of my account. One thing I didn't put in up here, for this example, we're going to use a 3-to-1 risk to reward ratio. If you're not sure what that means, then you probably shouldn't be trading. No, but what it means is that for risk to reward, 1 to 3 would be better. What that means is for every $1 that I have at risk, I'm potentially going to win $3. So if I have my stop loss set to take a $1,000 loss, if the trade wins, because of where I have the take profit set, I would win $3,000. So trade number 1, it wins. That means that I am up $3,000, which is 3% of my original account balance. But I only ever had 1% at risk. So you mean if I lost this trade, I would lose 1%. Okay, trade number 2. This is where the big word, asymmetrical compounding, this is where it comes into play. So on the first trade, I won $3,000. So if I lost $3,000, I'm just back to 100,000, back to square. Okay, so this next trade, I'm going to risk this $3,000 plus the original 1,000 that I had there. So that's obviously $4,000. Okay, so let's say I lose this trade. I would lose $4,000, but I'd already just made 3,000, so I'm actually only 1,000 behind. So that means if I lose this trade, I am now down 1% on my original account balance. Okay, so let's say this trade wins. I'm still using a 1 to 3 risk to reward ratio. So 3 times 4,000 is 12,000. So this trade wins. I'm going to make $12,000. I'd already made $3,000. Excuse me. So 12,000 plus 3,000 is $15,000. So I'm now 15% in front. On this trade, I was still only risking 1% of my original account balance. Okay, we did mention we're going to do 3 trades. Trade number 3. You can probably see where we're going with this now. I'm going to risk all the profit I've made so far, which is $15,000, plus my original 1,000, giving me, of course, $16,000 risk. Still using a 1 to 3 risk to reward ratio, which means if I win this trade, I win $48,000. Already won 15,000. That takes me up to $63,000 profit, which is 63% of my original account balance. So yeah, 63%, not 60% profit, but actually 63% profit in 3 trades. If I had have lost this trade, so if I'd have won this trade, then won this trade, and then lost this trade, I would have lost $16,000, but I was already up $15,000, so it would actually only be $1,000 down, or 1% of my original account balance. So in every single trade, if I'd have lost, I would have only went behind by 1%. But because I'm using that profit to do the asymmetrical compounding, it just gets crazy. So that does sound extremely simple. A lot of trading does. Obviously, you have to be at the stage in your trading career where you have a good chance of winning 3 trades in a row. Really, it doesn't matter if you try and do this 10 times and it doesn't work, you would be down 10%. If on the 11th time it works, you end up 63% in profit, minus a 10 from the first 10 tries, you're still 53% profit ahead. So it definitely doesn't have to work out every time. You only really have to pull it off once. Pull it off once a month and you're probably well and truly ahead. Alrighty, guys. So what I did want to go through was this. I put together a little spreadsheet, little calculator to work this out. Let's just go with $100,000 like we did before. We want to only risk 1% and a risk to reward, what we just did with 3. So you can see it works out exactly as it did before. But because it's on the spreadsheet, we can now play with these variables and see how it works out. So, you know, trade 1, we're up 3%. 2 trades in a row, you're up 15%. 3 trades in a row, you're up 63%. And obviously, if you're brave enough and good enough to snag 5 in a row, it's obviously a ridiculous amount of profit. Personally, I quite often only just go for 2 trades in a row, because if I can make 15% profit for the week, I'm more than happy. A lot of people are using asymmetrical compounding in order to pass the FTMO challenge. For those who don't know what FTMO challenge is, it's a prop firm, and if you can prove that you're a profitable and a safe trader, you know, they'll let you trade and let you to keep, like, you can essentially trade their money and get to keep 70% of the profit. So you can see why a lot of traders are pretty keen on passing the FTMO challenge. And to pass the FTMO challenge, you only need to make 10% profit for the month. So 2 trades in a row, and you're done and dusted. A 1 to 3 risk to reward ratio is fairly large, depending on what sort of a trader you are. You know, so take this here, for example, this chart. If I placed a trade there, I could put my stop loss, or you would put your stop loss just above this most recent point of structure here. So you'd put your stop loss, let's say there somewhere, because we're putting a sell order in without getting into the TA of the trading. You know, we're basically betting that the market's going to go down. If the market goes higher than here, then our TA is no longer valid and we'd want to get out of the trade. And, you know, to make the risk to reward ratio 3, we would have to put our take profit, you know, down here. And in this particular case, that's probably doable. I would suggest that the safest place to put a take profit line would be just here, though, where the market bounced here, so about there somewhere. That would give us a risk to reward ratio of just over 2. And 2 is a much more common risk to reward ratio in my own sort of trading anyway. So I don't want to do that. I want to get back to my spreadsheet. That's where I want to be, right here. So I'm going to put in the risk to reward ratio of 2 this time. You know, trying to get a 1 to 3 risk to reward all the time is, you can do it, but the trade opportunities are much fewer. So you'll find a lot more trades with a smaller risk to reward ratio. Okay, so trade number 1, how it plays out is, you know, you risk 1,000 to make 2,000. So obviously you end up 2% in profit. Works exactly the same. We're using our profit plus the original 1%. So if we win 2 trades in a row, it's 8%. Almost completed the FTMA challenge on that. And if we win 3 in a row, we smashed out 26%. So it's obviously a lot easier to get a winning trade on 1 to 2 risk to reward. So getting 3 trades in a row on a risk to reward of 2 is much more likely than on a risk to reward of 3. And you still end up with 26% profit. So pretty exciting still. I know from experience that if you go off the risk to reward of 2.23, 2.3. 2.3, obviously I didn't know it, but 2.32, there you go. So if you can have a risk to reward of 2.32, that means you can pass the FTMA challenge in 2 trades, 2 consecutive winning trades. And I don't know, I don't think you need to be the best trader ever to expect to be able to have at least a decent chance of winning 2 in a row. 3 in a row, still very doable. And as I said, even if you lose a few trying to get it, then you know you still end up well and truly ahead. Risk to reward of 1.5. You know, that means you're risking $1,000 to make 1,500. You know, you can still, you know, we're still talking about making a significant amount of profit in 3 trades. Anyway, guys, that's all I wanted to go through, really. Actually, there's one more thing I'll just have a look at here, is when placing the trade, you know, what I want to do is I've already decided Move this down a bit. So I've decided that that's where I'm placing the trade. Well, that's where the market was before. So that's where I'm placing the trade. That's where I believe the stop loss should go. And that's where I believe the take profit should go. So now I need to work out what size trade I need to take out in order to risk 1% of my account. So I can just grab the ruler here and go from here, measure up to there. And that's a 22, let's call it a 23 pip movement. So what I can do from there is, just give me a moment. Okay, so I've just worked out I need to set the stop loss 23 pips away from the trade. So what I'm going to do is I'm going to go to this Pip Calculator. Going to select Euro USD, just like I did. Set it in whatever currency you're using. I'm using USD. Pip amount was 23 pips. And I need to adjust this lot size so that this is $1,000. So it should be about 4 point. All right, 4.35 lot sizes. So that's the size trade I'm going to take out. I come back to my chart and I'm going to place a sell order of 4.35 lots, and I'm going to put a stop loss there. If I hit that stop loss, I would be taking a $1,000 loss. Down here, if I hit my take profit, because it's a risk reward of 2, I'm going to make $2,000. And quickly back to my spreadsheet. So that would be the first trade. I win the trade. Actually, we had that on too. So, I'd win $2,000. And then we have to look for another good trade setup. When we found it, we're going to have to set a lot size so that the stop loss is going to be a $3,000 loss. And just exactly the same process. I mean, let's say we found this setup. We'd measure that distance, would be 23 pips. Go to the Pip Calculator, and I just have to work out what lot size would give me $3,000 loss. Okay, so 13 lot sizes. And you just let the trade play out. All right, I hope that made sense, guys. It's nothing magical. It's just, a good way of compounding. We all know a fair bit about compounding when it comes to trading and investing and whatnot. This is just a way. It's never as easy as it looks, but this is like, for me, when I first discovered this, I realized how exciting it was. Instead of, to make a 10% profit, if you're making $1,000 profit off that first trade, if you did 10 trades like that, you'd have to do 10 trades like that in order to make $10,000. But if you just compound those results, you can do it in 2 trades. So that's, it was a bit of a mind-blowing moment when I first seen that. So have a bit of a think about that, have a bit of a play with it. And I think, as I said at the start of this video, risk management is one of the biggest parts of trading. Obviously, the psychology behind it as well, but managing that risk. I mean, as far as I'm concerned, the markets can either go up or they can go down. I mean, they can go sideways too. If they go sideways, you don't win or lose. So it can only really go up or down. That means you can either win or lose. So really, without any knowledge, you've got a 50% chance of getting that right. So even without any knowledge, if you can then manage that risk, that can push those odds in your favour, and all of a sudden you're a profitable trader. Anyway, guys, that is the big technical word, asymmetrical compounding. I hope you, hope you can sort of see the potential there, and it might give you a little bit more of an advantage, a bit more excitement. Definitely give you a little bit more of something to play with your trading. Talk to you all later.